Corey, welcome to the show.
Thanks so much. I'm happy to be here.
Happy to have you, and especially knowing your incredibly busy schedule. You are doing some incredible things down there in the beautiful city of Coronado, California, which is one of my favorite places to visit whenever I'm back in Cali. But let's do this for the listeners. You know, it's funny, in prepping for this, I was just checking out your social media and things like that, and you've obviously been interviewed a number of times. And why don't you do this? Just a quick, your personal background. How long have you been in the biz? What was 2018 units and volume for you? And just kind of get into that however you want.
Okay, sure. Yeah. Well, thanks. I've been in the business since 2002. 2018 dollar volume was around 150 million. And as far as the units, I'm going to do a little math here, about 320 units.
Yep.
Yeah.
320 units. What's the bulk of that, the source of that business?
Well, there's not one bulk source, but there's sort of three big ones. First of all, database management. I'm huge on that. So we're constantly sort of mining the database, keeping in touch with our customers. That's a big one. So just people coming back. Hey, I'm moving over here now. I'm refinancing this. I need to, buy a rental, second home, whatever. So a lot of that. A lot of financial planner business as well. I find that my business aligns really well with financial planning, and I've done that sort of on purpose. And that's sort of the way financial advisors, good ones, run their business, is the way I like to run mine. So it's a very professional, very good communication. Those are things that I spend a lot of focus on, and value add. Not price so much, value add is really, so I find that financial advisors align really well with that. And then real estate agents and a different group of real estate agents probably than your average ones. Definitely I'm working with the realtors that really get it and understand the value that we add and appreciate that for them and for their customers. So those are that's the bulk of it, those three.
Yeah, and I know we're going to focus on the financial planner aspect in just a couple of minutes because I think you're doing some pretty cool things there. When you say realtors that get it and understand the value add, so right, this is a debate that's been going on since the dawn of time, right? About value you bring. So what do you mean by value add from your standpoint to realtors? Well,
for realtors, my value add really is that, if I say I can do something, we do it. We don't close later than we say we will. We don't say yes and then say, there's a snag, we got to make a change. We have a very consistent loan process that takes sometimes more time on the front side, but that delivers results, at a rating of nearly 100%. So the realtor that gets it is the realtor that says, look, I understand, that there may be a better rate or something more attractive elsewhere, but the risks are not worth it, and the consistency and the results that we get going this direction are worth it. And really good realtors understand that. The best realtors I work with are not necessarily the highest producing realtors, although they are significantly productive, but they are realtors that are very efficient and that provide a very good service and that do very well. Because they have a reliable group of professionals that they can bring in to help them. We're teammates, we're partners, and so they can sort of rinse and repeat, really well when they know everything that's going to, how it's going on and how it's going to work and all of that. So, and they also happen to be the best at directing business or referring business.
Yeah, see, now that's an excellent point right there. And that goes back to, I think, what you say, the realtors that get it, because you could work with a lot of realtors and you probably have turned down some realtors in your career, right?
Oh, yeah, all the time. Yes.
Yeah. How do you get to that point where you're saying no to realtors? Is it after a conversation you find out they're not the right fit, not the right mindset? How do you usually reach that decision?
Well, yeah, I mean, typically it's, through maybe working on a transaction or two and, seeing that maybe their expectations maybe aren't in line with what yours would be. And typically when that happens for me, what I do is I have a meeting with them and make sure that we're on the same page. And they may tell me that, they want something different than what I'm able or willing to do, and in those cases, I just, I politely kind of close those and say, I just don't think this is really a good way for us to proceed, which is I think is totally okay,
Yeah.
and really doesn't, I don't think that should be offensive or anything. I think that there's, hundreds of millions of people in the world, and we're not going to get along or work well with all of them. I mean, it's just, that's,
Right.
so how can one person be expected to, fit the mold or the needs of all these different people, right? I kind of run my business a certain way, and there's a lot of people that like that, and I choose to work with those people. But those who wouldn't, I think it's just fair that we don't, and we identify those situations typically through a transaction or two and seeing something maybe isn't right and having a conversation. If that conversation results in, hey, I get it, I love it, let's do it, then great, we do it, but if it's, I kind of disagree and I need it this way, and when I say jump, I need you to say how high and all that, then, we just typically don't move any further forward with those.
Yeah, and so when you say things to me like, realtors get it, a bunch of different things come to mind, but one of them is, like I talked a while back and interviewed somebody and tried to position, you and I think have gone to similar schools of thought or training and coaching, Todd Duncan being one of them, which is the whole high trust sales and partnering, to use those words as as you've described. And I always liked to make my number one value proposition, right? Like you said, my process, the value, a referable experience, right? Which is what I'm trying to create. Couple questions in here, I guess. Number one, do you think that's valid? Do you have realtors who say, you know what, dude, that's just table stakes. You should have that great of an experience? Because what I'm leading up to is, do the realtors, back to your original statement of agents who get it, does that mean you don't get sucked into the vortex of, hey man, pay to play, Zillow leads? So I know I threw a lot at you there, but how do you respond to kind of that?
Yeah, I mean that is, I don't participate in that in the Zillow lead, and that's partly because I don't believe in Zillow. Really, it's not so much that I don't believe in maybe sponsoring or investing in something that could be mutually beneficial for both a realtor and a loan officer. So there are lots of things I'm more than happy to invest in. It's just Zillow is not really one of them. And if you think
by
about,
the way, any particular reason?
Oh, absolutely. Zillow is not my model. Zillow is not a value add type of place. You go to Zillow to do one thing and one thing only, and that is take, and really, and what do you go to Zillow for? I go to Zillow every single day. I don't pay them, so I'm going there and just getting information because they've got information. Mm-hmm. And then I take that information and I use it the way I want to. Mm-hmm. So, generally the customers that come off of Zillow where they're really heavily, reliant on Zillow for sort of everything, that's just not my customer. They're not going to see the value that I add, right? Mm. They're looking for cheapest, and they're talking to a million people all at once, and they're fine with burning people's time and not really ever proceeding with anything. So, it's just not really, the sort of model match that I'd be.
Do you have reviews on Zillow?
Absolutely.
Okay, that's interesting. I'm gonna. If I recall, you've got a pretty significant amount, don't you?
Mm-hmm. Absolutely.
So Zillow then, in that context, provides some kind of value for you there.
Absolutely. Right? As I said, I like many other people, I'm benefiting from Zillow.
Okay. All right. But you just said it's not your model.
Right. The model to go advertise on Zillow.
Okay.
Try to get leads from Zillow's platform. Yeah. Is, there's 10%, it's one out of 10 that convert. Right. Yeah. Zillow, for me, the reviews being on Zillow, those reviews are speaking to the clients that I am working with, right? Because they're Googling and they're finding that stuff. They're not. Right. They're not entering their data into Zillow and saying, hey, find me a house, find me a realtor, find me a lender,
Yet, anyways.
Well, my clients are, I'm saying.
Your clients are.
Yeah, well, people are.
People are, yeah, but your clients are. So help me understand that. When you say your clients are you telling me your clients aren't going to Zillow and searching?
No, they absolutely are. What I'm saying is they're not going into Zillow, putting in their private information and saying, have some random person call me. They're not doing that.
Even in the case of finding a real estate agent?
The clients that I'm working with are not finding realtors from Zillow.
Correct. Really? How are they finding them? Do you know?
Yeah, through the same sort of networks that I mentioned that I derive my business from. So trusted people that they know.
So
Yeah,
like
it's
financial.
very, very, very rare that I work with someone who found their realtor on Zillow.
Is that right?
Yeah.
And obviously you know this because you've probably had some dialogue with them that reveals
Oh,
it, right?
absolutely. Yeah, yeah, absolutely.
Interesting.
Yeah.
All right, so let's get back to your model. I'm just trying to like multitask here, look at your reviews online, because I guess let me ask you this. Have you ever had somebody, when you ask them, why did you choose me? What do you usually hear back?
If I ask them, why did they choose me?
Yeah.
I don't really ask that, but I guess I get the answer through different ways, but not by asking why you chose me. Typically it's, you were highly recommended by so-and-so who had a good experience, right? That's usually one big factor.
Yep.
And the sort of value of that individual who referred, right? So like I got an email right before I called or dialed into this meeting where someone said, I know and work with so-and-so as a coworker, and I really trust them and know that they're good stuff. So they said to call you, so I'm calling you. I get that a lot. That I would say that's the most common sort of response. Yeah.
You're usually people are coming to you by way of a trusted source.
They are. And then what they do, I believe in many cases, is they Google me.
Yeah.
Right.
And then they're going to look at your reviews and all that stuff.
And now the reviews are supplemental to what they've already been told. So one guy said, you're great. Then I went online and everyone said, you're great. So I'm here.
Yeah. Interesting.
But they're not going into Zillow and entering in their information and having, 180 lenders call them in the next, for the next 3 weeks until sign them,
Yeah. That's a wonderful process too.
Yeah.
I'm curious then, while we're on this thread then, what is your take on the whole, this is kind of very relevant for me lately, the discussion around digital disruption, obviously Zillow now, mortgage companies, and the competition for attention for consumers. Where's your thought pattern around that? Do you have any concerns, or does that mean you're adjusting your model in any way?
No, and not really. And I suppose we'll all find out, right? But
Yeah.
if you look at someone like Quicken, right, who is, from a marketing perspective, brilliant, from a call center perspective, has executed better than any other, really, and who ranks number one in terms of loan volume nationally. I don't consider them a disruption to me at all. Are they getting a good stake of or a good share of the pie? Absolutely.
Sure. But you're doing fine with them in the market,
Yeah, right. And really, I was telling someone the other day, it's like you go to the store and you look at milk, okay, and how many options do you have now at this point, right, with milk? Okay, so you've got, all different types of milk and different options, right? And, the regular milk guys, they're still there selling milk, but there's a market for them, right? And I think that, our industry is similar. There is room for different models to operate. Some people are going to go and push button and get mortgage with a rocket from a guy that, doesn't shave yet, who's in a call center in Ohio. Some people are going to do that and they're going to be good with it. Right. And that's that's fine. And that works for them.
Right.
And then there's the other person that really wants to come in. I mean, I have clients on a regular basis who say, I'd love to talk with you about this over the phone, but I'm really more of a face-to-face person. When can I come in? So, I mean, there's people, not everybody wants to do that. I get that. I'm not trying to help everybody, right? So I believe that there will be, room for Zillow to do its thing. There will be room for me to do mine, and Quicken, and all of us to operate in this marketplace and share in that business. So I don't view Zillow as a threat. And in fact, as you pointed out, to some degree, I benefit from that. And my model is such that, it may not have value if there isn't someone else doing it differently, right? So if they kind of make me look good in some cases, right?
Yeah, that's a good point, actually. I mean, that's why we have all the choices we do in milk or, mortgage professionals, whatever.
That's right. Yeah.
Then I guess last question on this thread, then we'll jump into the financial planner model you have. Knowing that you've got a largely, if I will, correct me if I'm wrong, what I will kind of articulate as a largely referral-based business, right, from trusted relationships and referral partners you've built up. I mean, Zillow, our conversation about Zillow with your reviews and stuff like that is a little bit playing into this, but I'm just curious for you in general. Are you consciously, trying to personally brand you, Corey, right? Your name and face, or, you know what I mean? Are you cognizant of that and trying to create those intersection points with your, potential marketplace?
Yeah, but more with people that, we're sort of warm with already.
Mm-hmm.
So we spend a good amount of energy marketing to people we know and that like us and that we like, and we put a lot of energy there and our resources there. I don't have banner ads. I don't have print ads that we're mailing to farm lists in certain areas.
You're not doing a lot of like social video and that kind of stuff?
We do some. Yeah, we do some. And then, when we boost that to stuff that's close to us, not geographically close, but like close, because that's who I think I'm going to have the greatest amount of influence with. And that's really why. So, we probably market more than your average loan officer. We do multiple mailings we're probably doing 8 mailings a year. Half of which have some sort of giveaway in them. And those mailings are going to thousands of people. These are people that we know and that we've worked with.
These are direct mail?
It is direct mail, but it's direct mail again to people that we know.
Yeah, right. Just to make sure it was like hard copy mail, not email.
Yeah, no, mail, hard mail.
Okay.
Mm-hmm. Yep. And, phone calls for a year. Personal phone calls to every past customer to check in on things, and also we always have sort of a reason for calling. So every time there's a reason, we don't just call and say, "Hey, how are you with your loan?" And we because at some point it's like, I don't, you can stop calling, right? But you have to call with some reason to call,
right?
There's a bunch of things that we do, but we put a lot of resources and a lot of energy into marketing to those we are already tight with, already close with.
Well, it's funny because I was kind of read a quote the other day that talking about like, your future clients and things like that. And that don't overlook the primary, most likely source of your future business. And that is within your CRM.
That's right. And I don't know if that was from me or from someone else, but when I'm speaking with loan officers, I'm in realtors too. I'm oftentimes just sort of confused as to why people want to go into these new directions all the time when they're not covering their own bases at home.
Yeah.
So I hear things like, I want to do a Facebook seminar and we're going to send a farm list and we're going to have a title company and they're going to try and get us people. And that's great, and go and speak in front of a group and hopefully pick up some new customers. That's awesome. But to me, that is phase 2. You do that after you are absolutely crushing it with those people that already know you, that already like you, that already do business with you. And if you're not doing everything you can in that department, then I don't see any reason to skip that and go out to a bunch of cold people that you don't know and try and convince them of things that the people you know already know, right? But that is which again is why I don't go to Zillow. I'd rather put my energy into people that I know and, don't have to convince.
Yeah, for sure. All right, let's transition a little bit for sake of time into one of the main kind of focuses of your business model. I wrote this down last time we talked because I love the talk track on this. So I guess we're going to get into some scripting here perhaps. But you took me through last time kind of the conversation and dialogue you have when taking a 1003 with people that opens up opportunities, for access to CPAs, for example, right? Tax planners. Right? You remember that conversation we had?
Absolutely. Mm-hmm.
You're like, yes, I've said it 1,000 times.
Yeah.
So are you still taking apps yourself before we get into kind of give me what your process is there?
Yeah, I take 99% of the apps that we fund myself. Okay. And I do them by phone and it's old school. And I get people sometimes who ask me about an online app and I explain why that's not going to be a great option. I don't ever get any pushback on that. The only time we do online apps is if our borrower is in China or something like that. And even then I try not to do it. I try to do it this way, with adjusting for a time change and get together this way. I feel like that's a very critical part of the process. And to start off electronically, I don't think I think you can do most of the loan process electronically and be pretty efficient and everything. But I think that first initial meeting and application should be either face-to-face or over the phone. done by the loan officer, and so that's what I do.
Did you say at some point in the process, though, you're also having Zoom conversations?
Absolutely. So yeah, like I said, like this, like Zoom, we do Zoom meetings if the client is open to it. I would say, I don't know, maybe 25-30% of our loan applications are actually via Zoom, just like this. So that we can, see each other. And I don't know, I am in my office, right? I'm not in a garage. I'm not at a Starbucks, talking about your private information with my friends around. It's just, it goes a long way for people to see you, to know, to know that you're in a professional working environment and everything.
Well, this, it's like the acceleration of trust face to face. You can read facial language, body, all that kind of stuff. You're going to get, the trust is going to be much higher if you can actually see the person.
That's right.
I think that makes a lot of sense. Take me through, if you could, just, high level overview of, I love that conversation you had before about when you're walking people through the loan app and you're asking them the questions about, their financial advisor situation, whatever, and how you pivot that into building your, business model.
Sure. Well, so there's a little bit of detail here, but, I find that, again, there's a lot of value in getting to know who your clients know, or who your referral sources know. It's that whole 7 degrees of separation thing where you can find more opportunity within probably that discussion that you're having with that customer, and probably better to spend your time doing that than to go start a new campaign to find new people that you don't even know. So what we'll do is when we're talking to a customer about a potential loan, is an effort to sort of make the process easier for them and frankly easier for us to some degree, is we'll find out who their sort of key partners are, or advisors are, really, right? So we're going to ask them about a financial advisor. We're going to ask them about a CPA. We're going to ask them about a realtor. We're going to ask them about insurance, and we're going to ask them about their trust. Okay. Because these are all things that we're probably going to have to deal with at some point during the loan process. But beyond that, there's also opportunity for me to help them, right? So if I know who their CPA is, I can call their CPA and get their tax returns. That helps the customer, right? But it also opens up that dialogue between me and the CPA, where maybe we talk about, I don't know, anything that we need during the loan process, but also maybe the potential for future business or just benefiting that particular customer down the road. So for example, we send out closing statements to the CPA after closing. It's, we do it on every single loan. And they're oftentimes just like, oh, wow, baffled by why we're doing that, or why no one else is doing that, I guess, maybe more than anything. But we make friends that way, right? And so we help our customer because we make the process easier. Now, some clients don't have CPAs, in which case I've got a CPA that I can connect them with if that's something that they're interested in, right? Mm-hmm. So, and we go down the line with financial planners and real estate agents and insurance agents and things like that.
Yeah, well, I want to get specific here for a moment for those listening, because I'm a big believer in, like this, where's this book right here? Just got this from Chris Smith, Exactly What to Say, When to Say It, because the worst time to figure out what to say is in the moment you need to say it. Mm-hmm. So you have this wonderful kind of transition where you're asking people about, their tax plan or CPA, whatever, and if they say they don't have one, that's the opportunity that you kind of engage in and offer up you to refer one to them, right?
Absolutely. Mm-hmm.
Yeah.
And so it allows me to feed back the trusted, partners that we are working with that are oftentimes referring us as well.
Yeah. How often do you find that people take you up on that?
Very often. In fact, I've really kind of built my business so that I'm somewhat of a gatekeeper, I suppose. And, we get people who are requesting information like that, months after closing, coming to us and saying, hey, who would you advise as a trust attorney or a financial advisor, which is really speaks volumes about, how we're conducting our business, because people trust us to the degree that they would not only ask us about a mortgage, but also ask us about something else important that is, in relation to their finances. So, mm-hmm. It's very common. And when you offer, when I've probably done that a few times today, when you offer that information, people really, are appreciative of having a good connection and a solid referral, right?
Oh yeah, yeah. And then on the flip side,
financial advisors, yeah.
Yeah, and on the flip side, what you're doing is also leveraging, if they do have a CPA themselves, then you're, you kind of alluded to this a moment ago, but offering, you basically say something that, would you mind if I, connect with them, introduce myself, because we're going to be working through the transaction, and as a matter of fact, it'll help it go smoother for you.
That's right. Yeah. I mean, because, how many times as a loan officer do you ask a customer for tax returns and they send you half of the tax return at the cover page? And that's frustrating for the customer, right? I mean, you're expecting them to understand it, know it, and send it and review it and all that. And so it's like, why don't I just take this off your hands? You're self-employed. You're going to have a K-1. You're going to have an LLC. You're going to have these things. Why don't I just go and get everything I need directly from the financial advisor or from the CPA?
Right.
Would that make it easier for you? And yeah, most of the time they say absolutely. Sometimes they say, my CPA is going to charge me to send these things to you or whatever. So in some cases, we actually don't do that, but we always make it an option for the customer.
And then at some point, perhaps if you're talking to that CPA, you try and go for a meeting.
Sure. I mean, if our customer who was referred by someone else that we know and trust, right, we've got this chain. If our customer says this CPA is fantastic, well, then I kind of want to know that CPA. The same way that financial advisor might have referred me and said, this mortgage guy is amazing. I like to, not only run my business that way, but I operate that way in my personal life, right? So, if I'm going to call a dentist, I'm going to ask, someone maybe who goes to them or someone that I know, who do you go to? So, I mean, we find that to be a really good way to meet new people that could actually be of service to our customers down the road.
Interesting. And of the CPAs, financial people that you work with, I know it's hard for you to answer, but I got to kind of go for details. Can you assess or give a rough estimate of the percentage that you work with that came from that process right there?
Yeah, it's not a huge percentage. I would say it's, maybe it's 10% or something like that. So when we most of this is a customer benefit, calling the CPA and having that, discussion with them and getting the tax returns directly from them, a lot of times that's where that ends. And that's partly due to probably our lack of maybe persistence or follow-up or interest. And maybe partly because, look, they're busy and they're just trying to get you what you need, and that's okay. I mean, we're not, we're not trying to work with everybody, we're looking for really a great fit. So this is not a shotgun thing where we say, okay, well, we want to get 100 CPAs in our database. We're really looking for good ones. We don't want to refer people who aren't great, so we sort of see if there's a synergy with them, and then if there is, then we maybe try to do a meeting and see where that goes. And
and roughly again, how many CPAs would you say are in your short list?
Oh, probably 15.
15. Yeah. And that's probably sustains you quite a bit then, those 15 relationships.
Absolutely. Yeah. And there's way more financial advisors. I mean, it's really hard to find, not only good CPAs, that are going to be good to work with. Yeah,
exactly. Right. They're unique individuals.
Yeah, right.
In a lot of cases. That's very cool. Okay, great. That's good strategy. What is your process? I don't know if it's similar to you because you've got kind of a mature business. Your core base of real estate agents. Are you in proactive recruiting mode for real estate agents?
I don't know. Probably not as much as some loan officers are. Yeah. I mean, again, I'm really all about good fit. I mean, I look at that first before production, all of that. I mean, we work with some very, very good realtors that don't produce at a high level because they don't really necessarily want to, but they're great to work with. And then we work with some others that produce at an extremely high level, and they're also great to work with. That's the common denominator is, them understanding the value add that we provide and that there's a good synergy and that we can complement each other well. So I'm kind of always looking for that opportunity where there's a good synergy and there's a good, just kind of common way of doing business. And then if there is, then we kind of go and try to sort of secure a relationship with those people. But, that's 1 in 5. It's not like we're going after everybody.
Right. And then I guess lastly here, just in terms of kind of overall sources of business, you are licensed in 25 states. Is that right?
Yeah. So that's been huge for me as well, is just diversifying, and so, I'm personally licensed in 25 states. Our company's licensed in 50. So really I can get loans done anywhere, and I do. I get loans in every single state. We get them done. I don't only do the ones I'm licensed in, because we've got other people in the office that are licensed in other states. And it's very rare that we get, Kentucky's like the one that we really don't have a lot of coverage or answers for. But yeah, so that's been huge. Financial advisors, realtors, clients, past clients, they know that we're licensed all over, and everyone knows someone who's retiring, right, buying a vacation home, buying a rental, getting transferred for work, military, all that, right? It's very common.
Oh, for sure.
And to just say, hey, sorry, can't help you because I don't want to do the work to get licensed, or I don't want to spend the money to get licensed, is an oversight, in my opinion. So I just started by getting licensed in a few states where it was really common. Mm-hmm. That I would get requests like in Arizona, Nevada,
Colorado.
Washington. Yeah, yep. Colorado is another one where it's like a reciprocal sort of state. And out of those, and then before it's like, hey, can you do a loan in Texas? Can you do a loan in Florida? Right. So as I had demand, even just a little bit, I would add the state. And now I'm active in Virginia and Florida, and New Hampshire and Connecticut and Texas. And it's funny, but once you have that, the license, you'll find there is a need,
Yeah, for sure.
And we market that. So, I really am marketing constantly, that I'm your local national mortgage lender. And on the national business piece, it's, I really get to add value even more there, because, let's just say that you live in San Diego and you're moving to Florida. That's a new place for you.
Right.
There's a lot of new there, right? You've got a new realtor, someone through someone else said something about them. And so, you maybe contacted them, but it's a new area. It's a new school. There's all this new stuff. Right. And so if I can be your mortgage person when you're moving somewhere new, it's just that little bit of comfort now that you have. And all of a sudden it's like, great, I'd love to work with you. And I don't want to go into the unknown. Right. So,
right.
I found that to be a big, big advantage for us.
What percentage of your business is from out of state, out of California?
Well, it's not from out of state, but it's done out of state. And I think
sorry.
Yeah, just to be clear. Yeah, we do about 10. I do about 10 units a month out of state, so it's probably 15, 20%.
10 units a month out of state. Wow, that's really good.
Yeah, it's a lot, and and it may even be more. We're constantly doing loans in other states.
Yeah, and most of that is because of prior relationships, like you said.
Absolutely. People. Yeah. No one's calling us from Florida saying, I hear you guys are great. I shouldn't say that, because as we're talking, I just got a call from an Arizona realtor who left a message with my assistant saying that they've got an Arizona client that wants help. And so it does happen, but it's not as common, and certainly as we get into different time zones, it becomes less common. So we don't really get people calling us from Florida saying, hey, I heard you were great. It happens, but not a lot.
What are your plans for next year, 2020? Do you have growth plans? Do you want to do additional volume in units?
Yeah, so I don't know, additional volume in units. I'll do about 225 million this year in personal volume, and I don't know that we'll do more than that next year. Probably not. If somewhat dependent on rates, I suppose. But we do have plans to grow the team. Okay. So in fact, we just took on some more space, and the construction's being done as we speak. It'll be done in about 2 weeks. So we are adding a few people, both on the sales and operations side. Mm-hmm. So that should be good. And that
what's the goal, by the way, not to interrupt, but what's the goal with the people? What kind of roles are they going to play?
Yeah, a couple loan officers and a couple of ops people. So one processor, another closer. I have an in-house closer, which is really a big advantage as well. But we'll add another one, another sales assistant, and a few loan officers. And, when I'm looking at these positions, it's the same thing as I'm looking at realtors or financial advisors. It's all about the fit. It's not about the production. It's not about anything else. It's all about the fit.
Right.
We don't have turnover here. We don't have loan officers leaving. We have people who are really happy and really like the process and what we do, and and all play well together. And that's what I'm looking for. So I'm not looking for the biggest producer just because. We want someone that really sees the value in what we do and will work well with it. and that's what we've got. We've got a great group of people that all work well together, that all see the value in what we do and how we do it. And, no big egos or attitudes or anything like that. It's really very special.
What aspect of this business is most enjoyable for you?
Talking to customers, advising them. I just had this 10-minute call today. It was supposed to be a 10-minute call. It turned into about an hour call, and there was no loan to get out of it. But just advising, right? I really, really like that. I like being able to teach people things. That's why I manage an office. I'm often asked, why do you manage a group of loan officers when you're doing $225 million in personal production? And it's the enamor I guess I have with teaching and showing, and why am I doing this podcast? Same thing. I mean, it's
right.
I enjoy that. I enjoy sharing what I've learned. And when I was new in this business, I was debatably obsessed with to a scary level with Tim Brahim.
Uh-huh.
And I watched him and everything that he did and in his videos, and at the time was kind of low tech, but at the time it was high tech for them.
Sure.
Now it would be considered low tech. But I learned a ton, and I spend my Friday and Saturday nights watching him and talking in front of the mirror, and I mean, all that stuff.
Practicing the scripts and the lines, yes.
Yeah, and how to separate yourself and all of that, and
yeah.
So, I feel like to some small degree, I'm maybe giving back by doing some of the teaching and things like that.
Yeah,
so,
man, you're paying it forward. And it's funny, it's a very similar path because Tim was one of my kind of early mentors from afar. Had the chance since then to meet him. And of course, he's been on the podcast, I think a year ago. But yeah, always loved Tim's style, his approach.
Mm-hmm.
Very different kind of vibe, different, style and talk track, and definitely, I think, higher level, What do you do in terms of do you do anything that, so I know this, what you enjoy most about the business is the education and advising. Do you have fun in this business, meaning incorporate socially related activities, community events or happy hours and things like that?
Yeah, I don't really do much of that.
Right.
Yeah. So I'm not out there rubbing shoulders or elbows, as I say, with a lot of either people in the business or even outside that could be a potential referral source. I spend a great deal of time working on my business and working with my team.
Yeah.
And that accounts for the majority of my waking hours. And then it's family after that.
Sure.
So I'm not super active out in any big groups or anything like that.
Well, I guess let me close it out with this thought then. Be back to the mentorship thing. Tim Brahim was the guy for you early on. Who or, what are your resources today for learning or growth? I don't know if it's a particular coach, if it's a book or something like that, or a person.
Yeah. For me, it's business owners that are successful in what they do. It doesn't have to be in the mortgage business. I kind of feel like the mortgage business, I don't claim to know everything, but I feel like I've got a good grasp on that. And I find a lot of interest in learning about business in general and how people do things and how they acquire customers and how they retain and how they provide service and stand out and separate. And so, I've got friends and family members that are business owners and successful in what they do. And so I oftentimes look to them. I do have a coach and, I am a huge Todd Duncan fan, although he's not my coach. I'm a huge fan of what he does. And by the way, a lot of what he does, I do as well. And we're very similar. Mm-hmm. And to some degree, that's why, I coach with some other people just to get different perspectives. Right.
Mm-hmm.
But yeah, those are the people, that I look to.
Are you coaching with a mortgage specific coach or more of a business coach?
Yeah, no, it's a mortgage coach. Yeah.
Okay. Got it. Yeah. Very cool. Awesome, man. Cool. Well, listen, I know you're very busy, so I appreciate you making the time and just jumping on here and sharing some of, your strategies for success, your mindset and all that kind of stuff in your business plan and process. And what I love about you, what's refreshing, and you might not be exposed to this as much as I am, but there's a lot of noise in the industry about doing business a certain way, and that's why I asked you the questions related to online and social media and stuff.
Yeah,
and I love it. It's a little bit kind of the alternate, the opposite answer, where it's do business the way that you enjoy doing business. And that's how you're probably going to succeed.
Yeah.
Right?
I mean, I tell my kids all the time, be you, right? And so, why do I not go to these big community functions and make that a big part of my business? It's just not really me. I certainly do some of it, but it's just not really me. Why do I not, make a big presence on Zillow and things? It's just not really me, and so while it may be a decent way to get business, it's just not for me, and so it took a long time, but I really, built a business that runs the way naturally I would want to be treated as a customer and how I would operate as a customer. If I was going to buy a home or do something real major like that, I would not put it in the hands of the call center guy at Quicken. Some people will, and that's okay, but I wouldn't do business that way. And so I run my business the way I would want to be treated as a customer if I was the customer in that business. And I'm a tough customer. So I feel like, I run it well, but, you can't, go online and get a rate quote with me and get your mortgage with the push button thing, so it's not for everybody, and I'm good with that.
Awesome, man. Well, if anybody wants to kind of reach out to you or whatever, where do you suggest that they go? I'm going to put links in the show notes. Do you want them to go to your Facebook page, your website?
Sure. Yeah. Go to the Facebook page. And if anyone uses Facebook anymore, I don't know if that's true, but
come on, man, just a billion people a day. That's all.
Okay. All right. Well, yeah. So that's a great place, and you can message me there or whatever. Yeah.
Awesome. All right. Well, listen, again, appreciate you being here. And as always, listeners, we appreciate you tuning in. And you know what to do if you like this episode or any of the episodes. Hey, leave us a little reviews out on the socials. We appreciate you, and we'll see you on the next one.